Hello guys, and welcome back to this class on the RSI indicator. Okay, so I have here 3 points that I want to cover in the RSI indicator. So the first thing, like many other indicators, indicators usually give us buy and sell signals, right? They indicate when is a good time to buy and when is a good time to sell, or to open and close positions in trading. So basically, the way you get signals from the RSI, you will get buy signals, a buy signal, when the RSI is all the way down here in this white area, which represents oversold territory. It means it's oversold. It hasn't been this low, the average price hasn't been this low for some time now. So usually when it gets to this low, people tend to buy. So usually when the RSI is all the way down in this white area, that represents oversold territory, and you get a cross in the RSI here. We had the orange line above the blue line, and then when it entered oversold territory, it crossed, and now the orange is below the blue. So when you see this cross and we are in oversold territory, this is a buy signal. So you could buy here. The price was exactly the price at this point was here, okay, and then you will hold it until the RSI shows overbought and it crosses bearish. So we had the cross right here and the price was right there. Okay, so you would have made a little bit of money in this trade if you trade based only on the RSI indicator, which according to the classic school of trading, you should not trade based in one single indicator. You need to use this with a combination of other indicators, because if you would have seen, if you would have been looking, for example, at volume and moving averages, you would have seen that when right after you bought, the price broke above moving averages. So this is actually a buy signal in moving averages, and the moment you sold, it was actually the very beginning of the next upswing. As you can see, the price goes much higher, right after you sold. So if you would have been looking only at the RSI, you would have sold here. But if you would have been looking at other indicators at the same time, you would have seen this could have been the very beginning of the uptrend, in fact. And then you could have sold. If you look at the RSI and other indicators, you would have sold probably in this oversold cross here on the RSI, or even in the next one. Anyways, this class is only for RSI. So that's basically how you find the buy and sell signals on the RSI. When it's oversold and it crosses bullish, you buy. When it's overbought and it crosses bearish, then you sell. Now, this brings me to the next point, which is when you should not buy or sell during signals on the RSI. Well, you should not buy during buy signals when we are in a downtrend. In other words, when you can see in the price action that we are doing lower lows and lower highs, and we are below moving averages, we are in a clear downtrend. So from here, you should not follow buy signals. You should follow only sell signals for short selling. So when we are uptrending, you should use the RSI buy signals to buy, and then identify your sellings as well looking at the RSI. But when we are downtrending, you don't buy. You simply don't buy. You don't use any indicator to buy. You don't buy during downtrends. You only sell or short sell. So that's the exception. You should not buy during downtrends, no matter what the RSI is telling you to do, right? No matter the signals from the RSI or any other indicator. Now, with this said, with cryptos and other markets, we can make exceptions because there are some markets that are very volatile. Commodities, for example, are usually very volatile as well. But cryptos, I mean, that's no secret. Cryptos are the most volatile market that have ever existed. It's just something from another world. The volatility in these markets is so crazy that you can still make money going long in downtrends. So that's what I mean. But I feel I have to explain the rules, that come from classic trading and from traditional markets. In traditional markets, in stocks, you don't buy during downtrends, and in crypto you shouldn't do it either. You can make some exceptions, and I mean, if we are very, 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 very low and we have a very clear and obvious support point, like it was here in the 3000, it was very obvious we would bounce on 3000 because it was the next obvious, previous strong resistance. It became a strong support, and after this vertical crash down, it was obvious it was going to bounce. So that was an opportunity to make money going long within a downtrend. So there's some exceptions. I always say this, and I make emphasize, you not only look at a combination of indicators, you use common sense as well, because sometimes it's okay to break the rules, but in general, we should follow the rules. And if you're not a very experienced trader, you should stick to the rules always. You will break the rules later when you're a professional, when you have, practice and experience, then you can play outside the rules. But I feel for these classes, I gotta explain the classic rules, how to play this game by the rules. And by the rules, you should never go long during downtrends, no matter what the RSI or other indicators are signaling. And the next point here is exceptions when the RSI is not relevant. And this is during breakouts. I should have separated this like that. So exceptions when the RSI is not relevant is during breakouts. So if I can find an example, when we are breaking out, the RSI will be overbought for long periods of times. Like, it's not natural, it's not something that happens often. But so even if you see the price for a long time overbought, for longer than normal, that's overbought, you should not be paying attention to the RSI at this time, because the price is breaking out. So it's normal that's going to be overbought for as long as the breakout lasts. For example, here we have a very clear example. I'm not sure what we are breaking out from here, but maybe there's a pattern in smaller time frames. I'm not sure, but you can see this in the RSI. I remember I did trade this one here. This was actually, let me show you this one because it'll be the perfect example here. You can see how the RSI is overbought for all this time. It came down a little bit here, but it didn't exit the overbought area here. And how long it lasted, this was like uh, 21 days. Yeah, I'm on the daily candle, so imagine this is 21 days being overbought on the RSI. That's not natural and it's not normal, but this comes from a breakout. We did trade this. I was sharing this on YouTube, but back then, if we go into smaller time frames, let me see the 4 hours, there was a huge triangle here, and because it was a very big triangle, the target was way really high. So this is, yeah, it was here. Let's see if I can find it. Yeah, right here. So this was a triangle. So you can see the very clear triangle here, and the target for this triangle was really high. The target for triangles is the vertical distance from this point to this point here. So after the breakout, the price had to go all the way up here. The target was, okay, so the target was at higher than 5,000, and it overperformed. It actually passed the target, as it usually happens, you know, in bull markets in cryptocurrency. But we see this was a very valid target because the price came back down to retest. But anyways, now having this target and the moment of breakout here, we can go back to the daily where we had the RSI overbought for that long. Where are we now? Right here. So you can see this started to get, you know, overbought at the moment of the breakout, and it stayed overbought until we reached the target and actually overperformed the target. The RSI only went down after we retraced after reaching the target for this breakout. So for as long as the breakout lasts until we reach the target, it's normal that the RSI is going to be overbought. So we don't look at the RSI during breakouts, especially very impulsive breakouts like we see in cryptocurrency that often. Because if you look at the RSI during breakouts, you're gonna sell right before the real juice, right before where you could be making a lot of money very, very quick. That's why we don't look at the RSI, or we don't pay attention to the RSI being overbought during breakouts. You look at the target, you get the target. If it's a breakout from a pattern, then you get the target using, you know, the target from the pattern, and then you don't sell until we reach the target or somewhere near. But I mean, you get your sell signal from the target of the breakout, not from the RSI. Hopefully this makes sense, guys. And I think that's all I have for the RSI. Very basic class. Thanks for watching, and I'll see you in the next class. Bye.